Hello everyone, this is Komal Bhanushali here. Today I'm here to present a very crucial topic, the one which is recently boomed in our Indian economy, in our Indian market, and which is shaken all over in our country. So today I'm going to start something theoretical knowledge about GST. Yes, the GST has shaken a tax which is going to levied in our country, which has been levied from 1st of July 2017 in our country and has shaken the all over economy, all over Indian market. So here I'm going to ask you few questions. Before GST was levied, what everyone has thought in their mind, what is GST exactly? Why is GST being levied and what are the impacts of GST in our country? So let's have an overview of GST and its impact in our country. What is GST? These are the plans, these are the topics which are being covered over here. Finally, GST, Goods and Service Tax Act. Yes, GST, if we read the definition, it says it is a destination-based tax on consumption of goods and services. It is proposed to be levied at all the stages, right from the manufacture up to the final consumption, with the credit of taxes paid at the previous stages available as a set-off. If we see this definition sentence-wise, the first sentence says it is a destination-based tax. The place, the state where the final consumption of goods and services is being taken place is the state and destination being taxed and has to bear the burden of tax. Second statement, it is proposed to be levied at all the stages right from the production till the end consumption, till the consumption takes place of the product. All the stages is being levied by the tax. For example, if I say that when a producer is producing a goods, he is paying the tax, and when selling the goods to the wholesaler, similarly wholesaler will pay the tax, similarly retailer will pay the tax, and at the end consumer, end consumption where the consumption takes place, the consumer is levied to pay and bear the burden of tax. But with the credit of taxes paid at previous stages available as a set-off, the most important thing, credit of tax, when the producer is paying some tax on his product while selling it to the wholesaler will get a credit of the amount of tax which is being paid by the producer. So the wholesaler has to only pay the tax on the amount which he has value added on the total cost of the product, which the third sentence says over here is, in a nutshell, only value addition will be tax. So the total amount which the wholesaler has added on the total cost, actual cost of the product, will only be taxed by the wholesaler. At the end, the burden will be taxed to the borne by the final consumer. So here when the retailer is selling the goods to the consumer itself has to bear the burden of tax. This was the definition. The present tax structure. What is the present tax structure before the GST was levied? Taxes likely to be subsumed in GST. Subsumed means the merger of all the taxes which has to be included in GST, which are merged with GST. We have two central and state taxes. Central taxes is central excise duty, additional duties of excise duty under Medicinal and Toiletries Preparation Act, additional duties of customs, service tax, surcharges and cess. These were the central taxes. State taxes, state VAT, sales tax, CST, purchase tax, entertainment tax, luxury tax, entry tax, not levied by local bodies. Taxes on lottery, betting and gambling, surcharges and cess. These were the central and state tax. Now the most important things are taxes not to be subsumed in GST, which means the taxes which are not going to be included in GST. GST is a different as a tax, and these taxes which are mentioned are the different as a tax. They are basic custom duties, the duties which you pay while importing your raw materials, you pay, that is custom duty, which is not going to be included in GST. Export duty, the export duty which you pay while exporting your raw material. Property tax on your property, stamp duty, electricity duty, national calamity contingent duty, that is called as NCCD, and coal energy cess. These are the taxes which are not going to be included in GST. Goods and Service Tax Act, why? Now, why was the need for the government to impact, to give this tax to our country? Why was such need that government felt that GST is a very much necessary thing which our country should be imposed on? Now, these are the reasons. We'll go one by one. Is over here. Encourages voluntary compliance, as a person in the supply chain will get credit only when the tax is paid by the previous person. For example, when the producer is producing some good, and if he is not paying tax on the goods he has produced, then the wholesaler will not be able to get any of the credit of the tax, because producer has not done his duty. He has not paid his part of tax. Because of that reason, wholesaler will not get any of the credit, and because of the producer, wholesaler has to pay the total amount of tax, and he is being borne by the burden of tax. So it is very much important that the previous stage means the previous stage of wholesaler, the previous stage of retailer, and the previous stage of consumer. If these previous stages does not pay any of the tax, then you do not get any credit, and all the burden falls on the current stage. Second point states, distinguishing between goods and services is not necessary because a single tax applies to all types of transaction. As here in GST, goods and services, they are being set as equal, has been given an equal importance. So there is no bifurcation, no distinguish between goods and services. Both the taxes are being equally divided, equally being paid. Goods on goods as well as on services, as double tax on same transactions will get eliminated. Firstly, when producer has to produce goods, he has to pay excise duty on his product. Then after paying excise duty, CST 2% was also levied. But now, nor he has to pay the excise duty, nor he has to pay CST. Now, only and only single tax, one tax, which is known as GST. Only single tax has to be paid. No tax on tax has to be paid now. Double tax on same transactions will get eliminated. No tax on tax anymore. Free movements of goods all over India, as entry tax, octroi gets subsumed. As I told you before, subsumed means it's going to merge the tax. So GST has merged these two also, entry tax and octroi. These two tax also gets subsumed, and you don't have to pay any tax, so you can move your goods from all over India. Origin-based tax to consumption-based tax will give advantage to consumer state. Before GST was levied, it was known as origin-based tax, central tax and state tax. So these were differently treated. But now, when GST has been levied, it is from origin-based. It has started as consumption-based. When we read in definition that the tax will be levied by the state where the final consumption takes place. Because of that, it is known as consumption-based tax. Will give advantage to the consumer state. Widen the tax base. Now, how this is going to widen the tax base? This is going to widen because the government has given some slabs rate. That slab rate has to be followed on the every product, every services which is being there in our country. So, according to that slab rate, the rate has to be fixed on that, and the tax will be widened. Reduces the number of laws and procedures, as GST is one nation, one tax. So the laws and procedures, the number of laws and procedures which used to be followed before GST was levied will now be reduced. Satisfaction will come to the corporate world. Standardization of practice across India. As I told you, one nation, one tax. So accordingly, this standardization will take place. The universal tax will be followed. The producer also will levy GST. Wholesaler will also apply GST. Retailer will also apply GST. Similarly, consumer will also apply GST. So the standardization of tax across India takes place. Eliminate the cascading effect of tax. This means double tax on same transactions will get eliminated. Yes, cascading effect was the same. One, you pay excise duty, then you pay CST. This was cascading effect now, which will get eliminated. Boost to investment and e-commerce. Now when I say boost to investment and e-commerce, what does this mean? When I say investment, when there is a single tax and the standardization of tax, the FDI foreign direct investment will increase, which will give the investment boost in our country. Also the e-commerce will increase. With all this effect, we feel there was a need of GST to be levied in our country. Similarly, there's one more example I want to give is when we talk about corruption. One thing which comes into our mind, why corruption takes place. When people has to transform their money, why it doesn't reach to the final consumer. Because of that reason, this was very much necessary to imply GST, where there is one tax, one nation. So anyhow you have to pay your tax. If you're not paying if your previous one has not paid, you're not gonna get the credit of the tax. Issues of present tax structure. Present before levying GST, before GST is being levied, the present tax structure which is facing issues, the cascading effect which we talked before. Custom duty on import. Now if we talk about import, what all things before we used to do, before GST was levied, this is the invoice amount. On your invoice amount, basic custom duty. The basic custom duty while importing your goods, you had to pay basic custom duty. Then you have to pay CVD, that is circulating vitalite duty. You had to pay this amount. On this total, you had to pay this amount and additional duty. On all the three adding all the three amount, you had to pay additional duty. So imagine you're paying tax on tax. So double taxation was happening. We used to pay tax on tax. And the burden of taxation was increasing. Because of that reason, the end consumers were also burdened. End consumers also had to pay much more tax. Now, if I talk about GST on import, how this is going to affect? When my raw materials are coming in, the invoice amount, on invoice amount, my basic CVD, that is custom duty, is going to levied, which is not being subsumed in GST as it is the same before GST. Basic custom duty will be added in the invoice amount, and the third tax, the only one single tax, is IGST. This is going to be levied while you are importing. Next, cascading effect, excise and VAT. Present. If we talk about excise and VAT, this is the situation before producers used to face. Present invoice with excise and VAT. When the producer is giving invoice, you have to pay excise duty. Excise duty is being paid and then you will pay VAT. On adding both this amount, you will pay VAT. You will pay VAT on this additional amount. So again here you are paying tax on tax. Double taxation takes place. But here in this case, if GST is being levied, invoice value, the amount of invoice will be only added with GST. That is CGST, SGST or else IGST. This depends upon central GST, state GST or intrastate GST. So depends upon your state, your central state, this tax has to be levied on your invoice value. Now I'm going to give you a small example where everything will be clear and proper to you. Will GST lead to inflation? Now what is inflation? If I talk about inflation where your purchasing power reduces. You are not able to purchase as much as amount from which amount you used to purchase it before. But here the case is different. I'll show you how. Will GST lead to inflation? The current scenario and the post GST. It means after GST was levied. Now current scenario, I'll show you. This is manufacturer, wholesaler, retailer and end consumer. Cost of input. The producer is manufacturing its good of 100 rupees. After paying 100, after producing the goods of from amount to rupees 100, the value is being added by the manufacturer of rupees 50. The now total cost of its product is 150. Now according to previous GST, the GST before GST was imposed, excise at the rate 12.5% was imposed, due to which 150 into 12.5% comes to around 19 rupees, which was total of rupees 169. Now CST at the rate 2% has to be added on this amount. So double taxation, tax on tax has to be paid. 3 rupees is being added. Now the total price, the total value of the product which was manufactured at rupees 100 became rupees 172. When the producer is selling 172 goods to the wholesaler at rupees 172, similarly the wholesaler will also add its profit to it. He is adding 20 rupees over here, which is costing rupees 192. Again 192 plus the amount comes to 24 rupees. Now here CST is not being levied because here producer has already paid it. So here he is not levied to pay any of this excise. Now he will be paid VAT at the rate 12.5%, which comes to around 24, and the total cost of the product which was earlier manufactured at 100 became rupees 216. Now when this product is being sold to the retailer is also adding its profit to it, 30 rupees. Total amount comes to 246. Then 246 VAT has to be paid on 246, which is 31 rupees. But now, as I told you, if the previous stage is paying the tax, you get the credit of that tax over here. So over here, the retailer is being allowed to take a credit, to take a set off of rupees 24, which the wholesaler has paid previously, and he has taken the credit. So total amount cost rupees 253. Now imagine the goods which was manufactured earlier at 100 rupees reached to the 253 rupees to the final consumer. So 100 rupees goods being 253 rupees to the consumer. Now if I go to the GST, what GST has done, due to what effect the consumer is being facing? Post GST, cost of input 100, value added 150, subtotal 150. Now here GST, these things are being eliminated. These things are being eliminated and GST is being added over here is 18%, which is divided into central tax, central GST and state GST 99%. But here it is mentioned as GST overall 18%. So on 150 rupees, GST 18% comes around 27 rupees. No other tax is being imposed. No tax on taxation will take place. One nation, one tax, only one tax is being applied. And your total amount costs rupees 177. Now 177, the total amount is being sold to the wholesaler. Wholesaler added 20. Total is 197. Now GST amount came to rupees 35. Now when previous producer, when the previous stage has paid his amount of tax, so again the wholesaler gets the opportunity to take a credit to set off that amount of rupees 27. Now if you go back in a flashback and see our definition, what does it said? The definition said that the tax has to be paid only on the value added according to the stages. So now when this 27 is being set off, the remaining amount 35 minus 27 is the amount which the wholesaler is paying on this amount. The value which he has added on the actual cost of the product is only being taxed, is only being added to the actual tax to be paid. Similarly, when 205 is the total cost according to the wholesaler is selling its goods to the retailer. Retailer is also adding its profit, which is 30 rupees, and the total comes to 235. The total tax which he has to pay is 42. Now, similarly, as I told you before, he is taking the credit of 35 which the wholesaler has already paid. Now, he has to only pay the tax on the amount which he has value added. He has value added 30 rupees to the actual cost, which is 205. So, he is paying the tax only on that 30 rupees which he has added as a profit. So, total amount, if we see, is coming to around 242 rupees. Yes, the total amount is costing 242 rupees. When previously we checked before GST was levied, the amount was coming around 253, and now the amount is coming 242. This was the case only in the numbers of 100. Imagine if the producer is producing the goods of rupees 1 lakh, goods amounting to rupees 1 crore, then what will the effect over here? Here from 253 to 42, if you are minusing this amount, the amount which you're going to save, the consumer is going to save is rupees 11, or we can say 5% of the total produced amount. So imagine the producers, when producing this amount of 1 lakh or 1 crore, then how much amount of rupees the consumer is going to save? I just think about it. GST is so valuable to us that we are saving rupees 11 on this 100 rupees transaction. So these were the benefit. So we can say at the end, inflation is not affecting us. Why it is not affecting? Because we over here are saving rupees 11. So we are not facing any inflation over here. Next, GST model in India. So now if I say model says destination based tax. As I previously explained, destination where the final consumption takes place applies to all stages of the value chain. All the stages right from the producer till the end consumer, all the stages is being levied. Levied at the time of supply of goods or services instead of manufacture or sale. When you are supplying goods or services, that time the tax will be levied instead of manufacturer or sale, producing or selling. Dual GST structure. Why this is told? Why this is being named as dual GST? As I mentioned earlier, that GST is being divided as central CGST and state SGST. These both are being termed as GST. So SGST and CGST, they both are named. Because of that reason, it is known as dual GST. Both the center and state empowered, similar to Canada and Brazil, where this situation is faced. Similar to Canada and Brazil, center and state is being empowered, and because of that reason, it is also called as dual GST. GST rates proposed are as follows. As we know that it has been already levied on 1st July 2017. From 1st July, the tax has been levied and the slab rates are being given by the government. Most GST products are likely to fall under the slab of 18. Now, when government has given some slab rates, according to it, almost many of the products fall under the category of slab rate 18%. As per the recent meeting of GST Council, which is already being done, instead of uniform rate of tax on all the services, there would possibly 3 rates: luxury, standard and basic. Government has decided to break this slab rates into mainly 3, that is luxury, standard and basics. According to this 3, the rates are being mainly divided. Now we'll see the slab rates which has been given by the government. 0 rated goods, services, essential items. The most essential items: food, water, necessities, we can say are basic necessities. Necessities are being rated at 0 rate, 0% rate on all the necessity goods. Common use items. Common use items we can say as clothes, accessories, are jewelry items, normal jewelry items which we wear in day to day, is being cost at 5%. Cosmetics, Yeah. Then standard rates. Standard rates is being termed as 12 and 18. As I told you that almost all of the products are being falling under the slab rate of 18%. Luxury and demerit goods. Yeah. We can say luxury goods, the one who is owned by the richest person or the rich person. We can say luxury goods are being given here as 28% plus cess. Yes, 28% plus cess is being charged to the luxury and demerit goods. Now, next, GST model in India. Continue. Taxes under GST. Now, what all taxes are there under GST? I'll just go through this. Central GST, which I mentioned before. State GST, which I mentioned before. Integrated IGST, which is known as IGST. And one more, that is called as UTGST. Now, what is this UTGST? What does this mean? UTGST means what? UTGST is the states which fall under our union territory. Dadra and Nagar Haveli, Daman and Diu. These are the states which fall under union territory. These states are being levied by UTGST. Now, products outside purview of GST, the products which are not yet being included in GST, or we can say that the products on which GST is not being levied yet, are alcoholic liquor for human consumption and tobacco. These things are yet not being implied under GST. Although petroleum products are covered under the Constitutional Amendment, these products below are being under Constitutional Amendment which are not being yet come under GST. For time being, crude oil, HSD, MS, ATF, natural gas are kept outside GST. These are the products which are not yet being covered under GST, which are yet being outside, which are yet to be covered in GST, and government has not given any of the rate structure for these ones. So these are still excluded. Indirect tax structure post GST. What was the tax structure post GST? Post GST, the tax structure was, if I talk about intrastate taxable supply. Taxable supply means within the state when goods or services being supplied, current regime was goods on goods, it was levied excise and VAT, excise duty and VAT, and on services